Hello everyone, welcome to Accountancy class. I myself Divya, lecturer in Commerce, gsipucmysuru College, Mysuru. So today in this session, let us learn about 12 marks problem under Dissolution of Partnership Firm, Chapter 5 and Session 5. Let's get started. In this question, Anita and Sunita are partners sharing profits and losses equally. Their balance sheet as on 31st/3/2018 was as follows. So balance sheet as on 31st/3/2018, on the liability side, bills payable 6,000, creditors 20,000, Anita's loan 5,000, Vanita loan 5,000, reserve fund 30,000, capitals Anita 50,000 and Sunita 50,000. Asset side, cash at bank 6,000, debtors inner column 28,000 less PBD 2,000, outer column 26,000, stock 40,000, investments 20,000, furniture 14,000, buildings 60,000. Total of the balance sheet is 1,66,000. Adjustment. On the above date, the firm was dissolved. The following information is available. Assets realized as follows: debtors rupees 25,600, stock rupees 39,000, buildings rupees 66,000. Anita took over 50% of investments at 10% less on its book value, and remaining investments were sold at a gain of 20%. Furniture was taken over by Sunita at rupees 12,000. Anita agreed to bear all realization expenses for the service. Anita is paid rupees 2,600. Actual realization expenses amounted to rupees 2,000. Prepare realization account, partners capital account as well as bank account. So in this question, Anita and Sunita are partners. They are sharing their profits equally. So equally means 1:1 ratio. So on the liability side, bills payable, creditors and Vanita's loan, it appears in the realization account. Anita, she is a partner, that's why it is recorded in the bank account. Outsiders loan ಆಗಿದ್ರೆ ಅದನ್ನ ರಿಯಲೈಸೇಷನ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡ್ತೀರಾ. ಪಾರ್ಟ್ನರ್ಸ್ ಲೋನ್ ಆಗಿದ್ರೆ ಅದನ್ನ ಬ್ಯಾಂಕ್ ಅಕೌಂಟ್ ಅಲ್ಲಿ ರೆಕಾರ್ಡ್ ಮಾಡಬೇಕು. ನೆಕ್ಸ್ಟ್, ರಿಸರ್ವ್ ಫಂಡ್ ಅಂಡ್ ಕ್ಯಾಪಿಟಲ್ಸ್, ಇಟ್ ಈಸ್ ರೆಕಾರ್ಡೆಡ್ ಇನ್ ಪಾರ್ಟ್ನರ್ಸ್ ಕ್ಯಾಪಿಟಲ್ ಅಕೌಂಟ್. Next, on the asset side, cash at bank is given, so you should open the bank account here. So it is recorded in bank account. Next, debtors, stock, investment, furniture and building, it is recorded in realization account. So here in the first adjustment, the assets realized as follows: debtors rupees 25,600, stock rupees 39,000 and building rupees 66,000. So once you are recording in the realization account and again in balance sheet. So when the assets is realized, it is recorded on the credit side of the realization account. Here Anita took over 50% of investment at 10% less on its book value, and remaining investments were sold at a gain of rupees 20%. So Anita off of the investment anna tekondu hogtidale. So off of the investment alli 10% less, the value of the investment is reduced here, and remaining 50%, remaining investments were sold at a gain of 20%. That means the off of the investment which is available in the business now, it is realized at 20% gain. Next, furniture was taken over by Sunita at rupees 12,000. Here once you are recording the furniture in the realization account credit side and in the partners capital account debit side. Next, Anita agreed to bear all the realization expenses for the service. Anita is paid rupees 2,600. Actual realization amounted to rupees 2,000. So once you are recording in the revaluation account debit side and again in the partners capital account credit side. So Anita agreed to bear all the realization expenses of rupees 2000, for which he is given the remuneration of rupees 2600. That means actual realization expenses 2000 paid by Anita is not taken in the realization account, but remuneration paid to Anita, that is 2600, it is taken in the realization account debit side. So next, realization account. So write the heading realization account, debit, credit, particulars, amount, particulars and amount. Now see the balance sheet. So liability side, balance sheet, bills payable, creditors and Vanita loan is there. Bring that balance to the realization account. By bills payable account amounted to rupees 6000. Next one, by creditors 20,000 and by TAS loan amounted to rupees 5,000. Next, on the asset side, data, stock, investment, furniture, buildings, it appears in the realization account. So record that one. First one, 2 debtors 28,000 by PBD amounted to rupees 2,000. Next, see the next asset, to stock. So what is the stock amount? 40,000. Next, to investments. Investments 20,000. Next, to furniture amounted to rupees 14,000. Next, to buildings 60,000. Next, see the assets realized as follows: debtors rupees 25,600, stock rupees 39,000 and building rupees 66,000. So write here by bank account. Question alli bank account open ಮಾಡಿ ಅಂತ ಹೇಳಿದ್ದಾರೆ. So write by bank account debtors. So what is the debtors? Realized value 25,600. Next, stock realized value is 39,000. Next one, buildings realized value is 66,000. Next one, see the next adjustment. Anita took over 50% of investment at 10% less on its book value, and remaining investments were sold at a gain of 20%. So what is the investment remaining? 50% investments. So the total value of the investment is 20,000 into 50 divided by 100, you will get 10,000. So in this 10,000, gain at 20% equals to 2,000. Now, so the actual remaining investment is 10,000 plus gain percent, that is when you calculate you will get 2,000. So total amount is 12,000. Write this one, 12,000 here. Now your total you will get 1,42,600. Next, Anita took over the 50% of investment. So by Anita's capital account, Out of 20,000, 50% is taken over by Anita, that is 10,000. On its book value, that is 10,000 into 10 divided by 100, you will get 1,000. That is 10,000 less its book value, that means you less 1,000, you will get 9,000. Furniture took over by Sunita by Sunita's capital account, that is furniture taken over amounted to rupees 12,000. 12,000. Next one, to bank account. So here all the liabilities are paid in full. So record here bills payable, $6,000, creditors account 20,000. Next one, Vanita's loan, that is 5,000. Total 31,000. Next, here Anita, last adjustment, Anita agreed to pay all the realization expenses. So the actual realization expenses 2,000, it is not taken in the realization account, but the remuneration paid by Anita, that is 2,600, it is taken in the realization account debit side. Anita's capital account, that is realization expenses. So realization expenses paid to Anita is 2,600. Now you total the realization account. Your credit side is greater, so total. So when you total the realization account credit side, you will get 1,96,600. Write the same amount on the debit side, 1,96,600. So deduct all this amount from 1,96,600, you will get 1,000. This is to profit transferred to partners capital account. Who are all the partners here? Anita and Sunita. 1,000. So they are sharing their profits in equal ratio, 1/2. 1,000 into 1/2, you will get 500. Partners capital account, write the heading, then write debit and credit, particulars Anita and Sunita, again particulars on the credit side, Anita and Sunita. Now you see the balance sheet. The balance sheet liability side, the capitals is there. Bring that balance here by balance brought down. Anita 50,000 and Sunita 50,000. Next, see, is there any reserve fund? Reserve fund is given in the balance sheet. Reserve fund. So the total amount of reserve fund is 30,000. Distribute in their profit sharing ratio, 1/2 and 1/2. How you got this one? 1:1 equals to 2, 1/2 and 1/2. When you distribute, you will get 15,000 and 15,000. Next, bring the realization account profit by realization account. So profit arrived is 500 and 500. Next, see the realization account debit side. So Anita paid the dissolution expenses, realization account, that is expenses. In the Anita column, you record 2600. Next, on the credit side of the realization account, we recorded the asset taken over by Anita and Sunita. Record that in the partners capital account debit side to realization account, that is assets taken over Anita 9,000, that is investment, Sunita 12,000 furniture taken over. Next, balance the account. So when you total Anita column, you will get 68,100 and Sunita 65,500. Write the same total here, 68,100 and 65,500. 68,100 minus 9,000, you will get 59,100. 65,500 minus 12,000, you will get 53,500. So this is the balancing figure transferred to bank account. So next one, bank account. Record debit and credit, particulars, amount, particulars as well as amount. Now you see the balance sheet, asset side, cash at bank is there. Bring the balance to balance brought down. To balance brought down. So amount is 6,000. Next, see the realization account. So realization account credit side you are recorded by bank account. Bring that one to realization account. This is assets taken, assets. This is assets realized. So the total assets realized is for 1,42,600. Next, on the realization account debit side, the liabilities paid off is there. So bring that one here by realization account. Realization account. This is liabilities paid. So the total amount is 31,000. Next, see the balance sheet. The Anita loan is there. So bring that one, Anita's loan account. So Anita's loan account amount is 5,000. Next, bring the partner's capital account balance. Anita's capital account, that is 59,100, and by Sunita's capital account 53,500. So when you total, you will get 1,48,600. So debit side also 1,48,600. I hope all of you have understood today's session. Thank you.